Hello students, today we will be discussing the class 11, the starting accountancy subject. In my earlier video, we have discussed the basics of your transactions, identification of debit credit, different types of accounts, personal, real, nominal account. Now we have to start with double entry system, how to enter in the books of accounts. See, first of all, कोई भी एक आइटम को एंट्री करने के लिए वो ट्रांजैक्शंस होना चाहिए. ट्रांजैक्शंस मतलब इट इज ए मॉनेटरी ट्रांजैक्शंस. दिस में बी आइदर परचेज फॉर सम अमाउंट, सेल्स फॉर सम अमाउंट, expenditure for some amount, capital for some amount, and this transaction has two sides, both debit and credit. So you must be knowing by this time that transactions, debit credit identifications depending upon the nature of account. You see that entire world, whatever the accounts heads will be there, it were restricted under three different account: पर्सनल अकाउंट, रियल अकाउंट और नॉमिनल अकाउंट. जितने भी सारी अकाउंट्स होता है, लैक्स ऑफ थाउजेंड्स और एंट्रीज विल बी देयर. Every entry will be divided into two sides, that is debit and credit. So before journalizing the entry, any transactions you have to identify two sides, that is debit and credit. Now we have to discuss that is what is journal. Jar means day. This concept came from day. So daily basis primary books of accounts where it is written, that is called journal. So that's why journal is a primary books of accounts. Then transactions are recorded in a chronological manner. That means it is daily basis and sequence wise. That is, say today is 5th January, next will be 7th January, next will be 8th January. Intermixing should not be there. So chronological order you have to enter. It is also called a books of original entry because transaction at first it is written in the journal, from where it is transferred into the ledger. So that's why it is called the books of original entry. Now we will be discussing what are the characteristics of journal. You see that journal contains day-to-day transactions in a chronological order. That means day basis. Chronology means day. See, you cannot intermix it. After 2nd January, then 3rd January, then 4th January, like this. It is a book of original entry because which transactions are written before they are posted into ledger. Next point it is coming that records both debit and credit aspects of transactions by using double entry system. You understand that. Double entry system is basic is that two sides. One, any transaction, if one side is credit, definitely another side must be debit. Similarly, any transactions, if one side is debit, then another side must be credit. Then next we will be discussing a journal is a record which shows complete details of transactions in our entry. What does complete details? Date, then transaction details, particulars will be there, and that will ledger folio will be there. Then your that amount, both debit amount and credit amount will be there. And next will be there your narration. Narration is nothing but what about the transactions details. What for this transaction has been recorded, that narration means that brief particulars we have to mention there. Journalizing means recording of transactions in the journal and from which it is recorded in the, from where it is recorded, it is known as the journal entry. So this is the thing. Now form of a journal, if you see that this is the format. Form means format. First it will start with date, particulars, then your ledger folio will be there, then debit amount, credit amount. LF short form, A means the ledger folio. You see that initially you have to enter in the journal, then you have to post them into ledger. So ledger folio means for your cross reference purpose, your ledger folio is required. Next we are recording in journal. We are giving an example. Suppose one transaction is being given, purchase furniture from Messrs. Raj Furniture for rupees 10,000, paid in cash. You see that transactions may be either आपको cash में हो सकता है, credit में हो सकता है. If cash nothing is mentioned, you have to assume that this is a credit transaction. Say particularly your cash is mentioned. So when the cash is mentioned, then your individual name from whom you are purchasing, that is immaterial, that is not important. Suppose 29th January today, we are purchasing one furniture from Mrs. Ram. So here two heads will be there. One is furniture head, another is your cash head, because cash is going on. Then your furniture, you know that your account hisab se, this is furniture account is a real account. Asset is coming, what comes in, that's why it is debit. And cash, when your furniture you are purchasing, your cash is going out, then your cash is out. So this is the transactions furniture account debtor to cash. DR is the short form of debit. You see that two columns are there, debit and credit. So debit also we are writing 10,000, and corresponding cash account, here we are not writing credit. 2 means always you have to assume that it is a credit, but corresponding figure will be 10,000. Now next is coming that suppose in your books of account this is the entry, this will may not be there. So tomorrow if you will see that furniture account there to cash means what for? This is the furniture purchase in cash. Same thing we are writing that being the furniture purchased for cash. This is the standard form. It will start with being, and you have to write simply purchase or sale, cash or credit, like that you have to write this way. So this is the recording of transactions, one example we are giving. Now we will be showing some transactions we will be giving you. Suppose 2024 January, some transactions were given to you. You see that Ramesh started business with cash 10,000, paid into bank means deposited into bank 7,000, bought goods for cash 5,000, drew cash from bank for office purpose. You are withdrawing some amount from the bank. Then sold goods to Krishna for rupees 15,000, bought goods from Sam 2,250. So these are the 6 transactions were given to you. So you have to record in the journal. So how to record in the journal, that you have to understand that. What you have to do that? First you have to see that one transactions wise you have to identify first. Suppose Ramesh bought capital, that means here two sides is there. Capital is bringing in the form of cash and Ramesh capital. This is the two sides. Cash here it is a real account. Real account concept hisab se cash what comes in is debit. Ramesh capital account, personal account. Ramesh is giving the benefit, that is giver is credit. Next your cash deposited into bank. Here two sides, one is bank account, another is your cash account. You know that bank account is a real account. Real account hisab se when you are depositing into bank, cash coming to your bank. So that means your asset is real asset is coming in. That's why it is debit. And when you are depositing cash into bank, your cash goes out. That is cash also is a real account. That concept of real account here, what goes out, that is credit. Next transactions, what we have given my earlier slide, that purchases cash. Purchases, it is an expense account, that is, it is a nominal account, that's why expense is debit. And here other side is cash. Since it is a real account and this cash is going out, it is credit. Now you are selling some goods to Krishna. Earlier slide we have given. See, there two sides will be. One is Krishna, one is sales. Krishna, individual, that is personal account. He is the receiver of benefits when goods are being sold. Then receiver of benefit being debit. And sales, nominal account, income, that is, it is credit. You see that whenever credit sales will be there, individual name will be there, cash will be subsequent stages will be there. Suppose initially you are selling or purchasing by credit, so your individual unit's name or the firm's name in your account will be there. So here is Mrs. Krishna, Krishna account is debit and sales is your credit. You understand that? Next is that purchases from Sam, some goods on credit, that is purchases here nominal account. Since it is a nominal account, expense, purchase means your expenditure will be there, and since it is your debit. Sam, from whom, is a personal account, he is giver. Purchases means when you are purchasing from him means he is giving you the benefit, then is credit. So here purchase this thing. So these are the identifications of debit and credit. You see that whatever transactions will be there, you know that the financial transactions only, without monetary terms no transactions will be there. Whenever you are to make it journal, first you are to identify two sides, then you identify the what are the account, that is either real account, nominal account or personal account. You see that whatever transactions will be there, it will be restricted within the three heads only. Another important thing, that both sides may not be debit credit same account, it may be different account. Then you have to, that formula golden rule will apply. Real account, what comes in, what goes out. Personal account, receiver, giver. And nominal account, expense, loss, income and gains. So these are the concept. So you have to identify it. And then today's our main discussion, that is journal, books of primary entry, books of prime entry, day-to-day basis. You have to one by one entry journalize it. Suppose purchase, here cash to capital, cash account debit to capital, cash debit, one debit column on debit figure you have to give, credit side one column will be there, and the summary of this transaction is being called the narration. That narration big particulars you have to give. So today we are concluding this journal part. Similarly we will be going on by one, ledger and trial balance, then balance sheet, profit and loss account, everything will be going. We are concluding the video here. If you do like my shares, please do subscribe to my channel so that I will be bringing more videos for your accountancy and business studies, all other subject wise. So we are concluding the video here. Have a good day.